think banks and financials in general are going to be the third best group out of the 11 S&P sectors in terms of earnings. So the expectations are high. I'm generally above the street, in my earnings expectations. So I expect positive surprises. The question is, are we seeing in the first half of 26 the best of the year? And that's my conclusion.
Yep.
I've done some historical analyses of correlations between bank stock prices and various bank metrics. And the one that measures up the best is what we call PPNR, pre-tax, pre-provision net revenues. Basically, it's just total revenues minus expenses, but no credit costs. And if you look at PPNR, when it peaks on a year over year momentum, it's usually when bank stocks peak. So PPNR this quarter, in the first quarter of 26, is going to be up about 12%. In the second quarter of 26, it should be up about 17%. But then it starts decelerating fairly rapidly into the second half and into 27. So you lose that momentum in PPNR as you move into the second half. At the same time, if I'm right about the credit cycle still having some deterioration on the corporate side, credit costs should be rising in the second half. And that means earnings growth generally should be slowing. So I think somewhere between, this first quarter report and June is when we start to see bank stocks peak and roll over. And so that's why I've remained, cautious to bearish on the bank stocks. But
Charlie, do you see a canary in the coal mine or a black swan event related to what we're seeing in private credit and all these gates that are being thrown up around redemptions? And it seems like there's some problems there.
There definitely are, and if that's in an area you want to be short is private credit. I've been beating that drum since the spring of 25, that private credit is going to be the epicenter of the next credit crisis. And the analogy that I've used from today to today is the 1907 panic, where the trust companies were the non-bank entities that blew up, and today's equivalent are these private credit companies. So yeah, I think they are the canary in the coal mine, that the credit cycle on the corporate side is starting to deteriorate. In the commercial banks, which will be they're not going to be at the tip of the spear, they're going to be at the end of the process. They've seen 5 quarters in a row now of higher C&I non-accrual loans, or what we call problem loans. C&I stands for commercial and industrial. And those are loans that do not include commercial real estate, CRE. It's strict meat and potatoes, middle market lending type of loans. It's also asset-based lending loans. That's one of the things I am going to look for in these first quarter reports next week is, are we still seeing higher C&I non-accrual loans? Because that says that the process of deterioration and normalization in corporate credit is still developing. I was going to say something else, and I forgot. Anyway,
okay.
So yeah.
Mr. Marson,
Yes.
Another thought on, it looks like small caps yesterday finally got a bid. We know they like lower interest rates, which doesn't look like it's happening. Lower interest rates are obviously worse for banks, but good for small caps. And this rally has just been staggering in the last week.
Yeah.
I know you were, I think you were sitting in a lot of cash. Did you do anything when you started to see the bid, or just kind of sat back and watched? And I don't know, how are you looking at this big ramp? Is this a place you start thinking about shorting again, or where are you?
If I had to trade, I would sell or short rather than buy. Not to say you can't find an occasional laggard that has catch upside or is an arbitrage versus a peer group, and that was sort of the reason for one of my last 2 buys was the InTest trade, which there's sort of been big news on that, by the way. The CEO got fired last week. So he got fired after we doubled our money. But the problem wasn't that we doubled our money. It was that the stock was so cheap it could double. And the numbers were sort of really bad for 25 to try.
Irrespective of the CEO.
Yeah, exactly.